Greetings everyone. In this video, we're going to look at some live futures trading. Stick around, let's take a look. Okay, what we have here for this live trading, sorry about the bait and switch going on there, but this will be a real-time trading versus live. Full disclosure, I am using a temporary account here, a demo account, a paper account. This is a replay account, so what I can basically do is go here and pick the date and time that I want to see the market is at, start it from there, and actually trade the market in real time as if it was being built tick by tick at that point in time. And currently I'm choosing right now, this is February 23rd of 2021, and I have the NQ with the H contract. So this is following the Nasdaq, and the H contract is from March, the expiration of March of 2021. And we're looking at this again at the end of February here. And this is completely chosen. This is a completely fabricated and cherry-picked environment just to demonstrate what I'm looking to demonstrate here today. Because we are using the full NQ, the full Nasdaq, each point over here from this, you can see this 306 to 307. These are $20 per point, and there are four ticks or 4 pips in between, so those would be $5 each. So when the price moves 1 point, we either win or lose $20 depending on the direction, whether it's going for us or against us. So with a little bit of setup here, this is 3 a.m. We can see where is it? It's right here, 3 a.m., 10 seconds after 3 a.m. I have this set now on a 1 minute chart just to get through this. I'm using the speed of the replay as 100%. So it's running at normal speed. So each candle is a 1 minute candle. It will take 1 minute to print the next candle. And I just quickly hand drew a line on here, a trend line, again for the purpose of this demonstration. And right here I have this volume profile, and we can see this is the highest point right here where the most contracts were traded up to this point on this trading day. So I have a feeling that the market is going to retrace back down to this point of control. So let's go with that. 3 o'clock Eastern time, London session is opening. So I'm going to go ahead and say, well, if this breaks this trend line, I think it's going back down here. So let's take a look at one thing first. How far do I want to put my targets? Well, let's just take an average of these candles. I'm going to use this white candle right here. If we look on the right hand side scale, we're at 306 and about 306.5, and the top of it up here is about 309.5. So that's a 3-point candle. So when this breaks, I'm going to right here, I'm going to sell, and I'm currently at 307. Let's make this even here, 307. 3-point candle minus 307, we'd be looking at 304. So now I have, if it breaks below, price breaks below this trend line at the open, I'm getting filled on a short position here, and I believe it's going to go at least 3 points based on what I'm seeing here and about the size of the other candles leading up to it. Now, since this is the point of control, I may want to take advantage of that. So I'm not going to move this all the way down to the point of control. It may not get there. What I'm going to do is look at this low volume area right here, and I think let's just put it right here on the edge of this low volume area right there. So we went from 307 down to 304, but we're getting about an extra 2 points out of it. An extra 2 points in this case will be an extra $40. So let's just start this and see what happens, and let's keep an eye on it. This is normal speed, so now the market is open. We can see the time up here is counting down, and we see, here we go. We're breaking in. Let's see. We just got filled. There's our line. We just got filled at 307. We have our profit right here, our position profit, and we have our open P&L for the day at the top if we just want to keep an eye on it. But so far, we're doing pretty good. We made a good call on this so far. And we're going to watch, again, this isn't real time. We're 30 seconds into the open. And what would we want to do for a stop loss? I don't know, maybe put it up here above the last swing high. Not here to teach the trading, but I just want to show what it looks like on the futures with this real-time movement. Now, to save everybody some time, I'm going to actually speed up this replay a little bit. Let's go a little bit faster, make it 200%, and let's see if we can get this to drop down and get us filled. to make our position. And here we go, a little bit quicker. Now this is where you get a little scared because you have some wicks forming, but we're thinking it's going back down here to the point of control. And when we get filled at the bottom, we will go ahead, and I'm going to pause right there. So here we are. We got filled here at our position, short position, and then we broke the plane here, and we got our fill. And this was so many points right here. Well, we bid it was I think 6 or 7 points, and there's our P&L so far. Okay, we have a $95 profit, and we are looking at 2 minutes into the opening of the London session. Now, does that happen all the time? No. But it is something that I wanted to show and I want to demonstrate with futures where it doesn't matter for long or short. We can go either direction. It's very inexpensive. This trade would be about a $2 trade. You're talking about roughly $1 in each direction plus some fees added on. And we can take a nice quick movement on some of these pops. Now what I did do is I also set up the ES, which is up here. So this follows the S&P 500 at the same time frame. Now, because we know what's going on, let's just go back and reset our replay account. We're simply just going to pick the same day on the 23rd, 3 o'clock, start the replay. Here we are. And let me go up here and pause this so I can we can get this set up. So we're looking at the same thing. If I shrink this down a little bit, we're looking, the point of control is way down here. So I'm thinking that, well, if we break this level and we break this line, we're going right here. We're going to sell, and then we'll put a buy lower. But I want to check the candle height on this at first because this is the ES, and it does not move as much. The point difference is that there's a difference in points the way it moves. The NQ is going to move about 3 times as far. So if you get a 9-point move in the NQ, that's going to equate to about a 3-point move in the ES, or maybe a 2.5-point move. So these candles here, let's just pick an average candle, this green one. So we're looking at, on the right-hand scale, 390.25, and we're looking here at 391. So there's a 1.25, or about a 1 point. As you notice, it was 4 in the ES that we were looking at. So let's go in and make this for a couple of points, shall we? This here, let's say if it breaks below 390, we want to go to 389. But as we looked further, we notice our point of control is way down here. Let's not wait for that. Let's go 389, and let's go 388.50 right here. Okay, now we are staged. We're all set to go. Again, we're on the H contract for the ES. Now, this scale, because it's the ES, these are $50 per point. The NQ is $20 per point. The ES is $50 per point. And it runs the same way, 391 to 392. This is a $50 move right there. And these are $12.50 in between each one. So let's go ahead and start this replay going on here. We're going to move this quite up. Let's do it at 400%. And we know that we're looking here for our break of our trend line. We're looking to get filled short, and we are looking for us to make our 2.5 points right here, 1.5 points right here. So let's see, 2.5 points actually. And we're going down. 88.50. I was right the first time. 1.5 points. And this should not take too long. There's our fill right here, hovering a bit. And the benefits of hindsight, isn't it? When we go back and look, we can see what's going on and make the proper adjustments. Now this shouldn't take too long because we want to get this filled, so we can go on with this video. But these are $50 per point. We're going to take a look at the micro contracts next, and the micros are simply 1/10 of the E-minis. So the NQ being $20 per point per contract. The MNQ, the micro NQ, will be $2 per point. This is $50 per point in the ES. It will be $5 per point on the MES. And what's good about this is of trading these micros is you could scale in and out easier. Okay, so you can add 2 contracts. Instead of being $5 per point, it'll be $10 per point. So it's it gives you some freedom if you have large accounts, or it gives you some ability to stack some orders where this here, you may have wanted to put an order in every half point, so it filled each one. So if it ended up filling the first one and reversing on you, you really lay down 1 micro, in which we can take a look at that. But here's our order, here's our fill. For the short, here's our buy to cover take profit, and we can look, we have $83. It's roughly the same move that we just saw in the NQ. However, in this case, it's a couple of point move, where this was a larger move, but we're ending up with almost the same amount. Something to consider if you're switching back and forth between the two. So let's take a look at the micros, and let's see how they move. We're going to go here, instead of the NQ, we'll be using the MNQ, the H contract for March, and the 1 is for 21. MNQH1, here it is. And then, as you can see, it's going to be pretty much the same. And this is the MESH of 21, which is right there. So let's do the same scenario, and we'll go back and we'll reset this account to get that same position. Start the replay. And we'll leave both of these up at this same time, and we'll just go into here, and let's put our order. I think it was right here. So we're going to sell, and we're going to sell here, and we put our buy a few points below here, 39, 38, right here. There's our cover, and then here's our cover here. This is roughly where we were before. And we can see we are now filled on the NQ. We see our current position of -1, and then we have our open P&L. This one hasn't been filled yet. So let's expand this a little more, and let's add a second contract here. So we're going to sell there as well, and then we'll buy to cover if it goes a little further. So we're in it for 1. We'll fill our second one short here, and then we will close 1 here, and we'll close 1 here. These are really good to do with the micros, because you can put a couple of them on here and let one runner go. So as a matter of fact, let's do a third one. Let's do a sell, and let's keep this one, and let's move it all the way. Let's move it down. Let's take our profit quick on these two, this one here and this one here, and let's keep one open way down the bottom like this. So here we are. We are filled with 1. We have our second one, our third one, 3 fills. In this case, I'm not even toying around with stop losses. Put them to your own risk management. And then we're going to fill 2 of them quickly right here. We're only talking about a point apart to make sure we get these 2 filled, the first 2 filled, and then the third one we're going to leave on as a trail. Okay, now we're filled with all 3. We can see we have -3 right now, and we have our position is currently flat, but you can see it going back and forth. Here is our position down here, $1.25. Let's stick another contract on here to begin with, and there's our second fill, and let's do a cover right here. Okay, we can see the top. We just got covered, and we still have 1 open. We still have 1 position. We're a short position. We're waiting for it. We have 2 positions filled right here. It shows 2. And this whole video is just to show the nature of the movement of futures. How yes, it moves like stocks, moving up and down, candles, wicks, price action, trends, the whole thing. But the point system is what the focus is here. I'm filling down. Let's speed this up a little bit so we can we'll get through this. Now this one, our third one, has not been filled, so we may be waiting, getting scared that this is going to come up here, or we can be patient and see if it comes down back to this point of control to fill. Now this one here, if we don't like it, let's move it up a little bit, see if we get it filled. Let's move these ones up a little further, see if those get filled. Looks like the NQ is coming close. And there's our NQ is filled right here. We have 3. We have no more open positions up the top. And we just got our ES filled as well. So we put our 2 orders on, one here, and they both got filled. and then we have our 3 orders on. We got our first one, and then the second one right after it, and our third one just got filled here. As we can see, this it definitely dumped, which is why I used this day and kind of set it up there. So these are the micros, and we're still only 5 minutes into the market, and we're up $14. Now, if this was a mini, would we be talking $146.50? So it's going to base on you, your risk level, your account size. That's really all I wanted to go through in this video. Hopefully it gave you a look as to how the markets move and how the futures markets moved, and then some of the differences of the price ranges using the full minis, the E-mini, and the full NQ, and the micros. See how they work together. We will catch you on the next video. Put any questions in the comment section below. We'll be happy to answer them for you.